Prior to the weekend, Trump imposed major new tariffs, and most people think it's just about trade wars and foreign policy. But what if I told you this could be part of a much bigger plan, one that might actually be setting up for a massive shift in the economy? And more importantly, what does this mean for crypto and for the stock market? Could Trump be deliberately crashing markets now just so he can rescue them later and come out as the hero? After all, if the markets were to crash this early in his presidency, he has a better chance of being able to blame it on Biden and then become the hero when he recovers the market later on. So could this all be part of his plan? Interestingly, 𝗟𝗶𝗿, the former CEO of BitMEX, just released an analysis predicting a major Bitcoin crash to around $70,000 before the money printer turns back on and Bitcoin explodes to $250,000. But here's the thing, I just did an interview last Friday on this channel with 𝗟𝗶𝗃𝗲𝗃's macroeconomist 𝗟𝗶𝗃𝗲, where we discussed the likelihood of QE happening before the end of this Bitcoin cycle. I will link that video somewhere up here if you want to check it out, but the conclusion was that the chances are extremely low unless something drastic happens, like another pandemic or a stock market crash. So that then begs the question, could Trump be intentionally triggering the market crash right now to fast track QE and set himself up as the hero? In today's video, I'm going to be breaking down why Trump is really imposing these tariffs, how this plays into his bigger economic game plan, the short-term impact on Bitcoin and crypto, and when this market could bottom out before the next big move. But before we get into all of that, if you're new here, welcome. I'm Annie and this is Trade Travel Chill. Be sure to hit that like button nice and early for the YouTube algorithm, and also hit subscribe if you haven't already so that you can be notified every time I drop a new video. Now let's get into it. So let's quickly break down what's actually happening. Prior to this weekend, Trump imposed new tariffs on Canada, Mexico, and China. There's 25% tariffs on most Canadian and Mexican imports, including automotive parts, agriculture, and consumer goods. And there's 10% tariffs on Chinese imports, hitting electronics, textiles, and machinery. And the reason that Trump is giving for these tariffs? Illegal immigration, fentanyl trade, and trade imbalances. But we know by now that what most politicians say isn't always the real reason. So here's where it gets interesting. Canada has retaliated with its own 25% tariffs on about $155 billion worth of US goods, including various consumer products. And Mexico has announced plans for retaliatory measures, but it hasn't yet specified the details. China is preparing to file a complaint with the World Trade Organization and has vowed also to take corresponding action. But here's the kicker. In 2023, Canada sent 76% of all their exports to the USA, accounting for roughly 19% of their GDP. In 2024, Mexico sent 78% of their exports to the USA, accounting for 37% of their GDP. For the US, however, exports to both countries combined are only about 2.7% of its GDP. Therefore, getting into a trade war will hit Canada and Mexico much harder, and Trump knows this. So what's the bigger picture? These tariffs will strengthen the US dollar, disrupt global trade, and create economic uncertainty. Exactly what you'd want if you were trying to reset the economy. And if you don't believe me, let's look at what happened the last time Trump did this in 2018 to 2019. This is a chart of the S&P, and on the 1st of March in 2018 was when the plans for tariffs were announced, and on the 8th of March is when they were signed. We saw this initial move down about 10%, but later on in the year, the full effects were felt where we had a stock market crash of about 21%. You see, this is the first time Trump has used tariffs as an economic weapon. In this 2018 period, that was when Trump announced tariffs on steel and aluminium, targeting Canada and Mexico. In 2019, US tariffs on $200 billion worth of Chinese goods jumped from 10 to 25%. And we saw an initial move down in the stock market then as well. All of this is what caused our stock market crash in late 2018. But the result of that was that Trump was then able to pressure the Fed to pivot. So after we saw that 20% market crash, by mid-2019, the Fed cut rates and the markets rebounded massively. So let's connect the dots. In 2018 and 2019, Trump used tariffs to intentionally weaken the markets, then forced the Fed into cutting rates, which sent stocks soaring in 2020. Could he be running the same playbook in 2025, but this time on an even bigger scale? Right now, we're in a quantitative tightening phase, meaning the Fed can't turn the money printer on yet because inflation is still too high. But Trump knows he needs stimulus to pump the stock market again before the 2028 election. And this ties back to what Jared and I discussed in our interview last week. Jared said that QE wouldn't happen unless something drastic occurs, like a stock market crash being one of the examples that he used. Therefore, could Trump be setting up that exact scenario right now? In the past 24 hours, the crypto market experienced over $2 billion in liquidations, surpassing the amount seen during both FTX collapse and the COVID-19 market downturn. Now, historically, such extensive liquidations often lead to a relief bounce as a buy the dip investors re-enter the market. And last night, Bitcoin reached my initial target of $91,200. But before we take a look at the current Bitcoin chart, just a quick interruption to let you know, if you're keen to learn how to trade these markets, we do offer memberships at Trade Travel Chill that give you access to all of our courses, our live sessions, our private community, and our live trade setups. To learn more about it, you can just head over to our website. You'll find the link in the description of this video. Now let's go take a look at the current Bitcoin chart. I'm over here on the daily time frame, and as you can see, this down here was my target that I covered on yesterday's video, providing we didn't hold around the 50 EMA and the point of control. Now we did break below that, so that made the second target between 90,300 to 91,200, and we wicked right into that area. Now on a smaller time frame, it looks like a scary epic crash, but when you zoom out and look at it on the daily time frame, it really is just revisiting the daily support at this point in time. And when you have such a high amount of liquidations like that, the major damage could already be done. So it does make sense to start looking for pivots around this area. But even if we get them, it could lead only to a short-term recovery. So we have to be prepared for Bitcoin to now make some sort of a recovery, maybe back to the middle of the range. It also lines up with the daily time frame 50 EMA. And if we can't reclaim that area, so that's at about $99,000, if we can't reclaim that and get back above it, and it's actually looking weak when price returns there, we could then see further downside to somewhere around the daily time frame 200 EMA. Now, if it gets that bad, I do still have my old target around $78,000, and that lines up with this blue vector right here. And the reason for that is because if we do actually break this daily support eventually, now it might not be something that happens this week, this could take quite some time to play out, and like I said, it is dependent on actually breaking the daily support first. So if that were to happen, we have a low volume node here that created this green vector candle. So what that means is that if we do break this daily support level, it should be a fairly fast move back down into the next highish level volume node. So I wouldn't expect price to really stop until we did get around this blue vector, and that's why my target is in that 76.5 to 81.5 kind of range. And when we have a look at trading light, we can see that those orders are still in that zone. So that's pretty large orders, 907 currently at about $78,000. But because so much liquidity just got wiped out on the move down, that's why it's unlikely that we would just head straight down there from here. We have to build more liquidity. If there is intent to drop the market even further, we have to build more liquidity by having that temporary bounce before we turn around again. And I just want to reiterate one more time that all of this is dependent on us not holding the daily support. At this point in time, we have held it, so we have to also be open to the idea of market structure changing within the channel, and then we actually just remain bullish again. So to get a bit of a heads up on which idea might actually play out, that's when we can go down to lower time frames. And on the 4-hour time frame, what we can see is that we just revisited this prior vector candle here. After this trapping volume formation, this looks like our 4-hour level 1 drop, and this looks like the level 2 drop. So again, could be a retracement back to EMAs before another further dip down, but the further dip down could revisit the daily support again. It doesn't mean we're definitely going to break it. We have to see if the price does eventually return to that level, how much momentum is there in the sellers at that level that makes it more likely that we're to break it. In the meantime, however, in the very, very short term, we would expect at least an attempted recovery after such a big liquidation. And that opens opportunities for potential day trades. It also opens opportunities for you to allow the market to bounce as high as it possibly can, especially in your altcoins that you might be down a lot on. Look for weakness once the bounce looks like it's topping out and sell out of those underperforming altcoins at the highest price possible, providing you want to sell them. Some people are happy to remain holding onto alts right now and don't believe that we're going to go down any further. That's a personal decision and no one can really tell you what to do there. I personally still think it's not worth a buy the dip strategy on altcoins just yet in this market, and I still think you're better off smaller time frame trading them. But with that in mind, I do have my video coming out tomorrow where I'm going to discuss this in more detail. I've come up with this trading strategy that you're going to be able to hold over 3 to 4 weeks. You're going to be able to get in, you're going to be able to take your profit, so it doesn't require the attention span that you need for really small time frame day trading. It is more of a longer term swing strategy, in and out in a few weeks, but it will make sure that you don't become bag holders of your altcoins. So I will share that video with you hopefully tomorrow. It is a very detailed video that takes a long time to edit. So like I said, if you're not subscribed, be sure to do that so that you can be notified when that video comes out. But I definitely think that that's going to turn out to be a much better strategy than just buy and holding alts right now and continuing to buy the dips, because if you don't buy now, you'll regret it later. I'm going to show you evidence of why you probably won't regret it later. So let's go back down to the 1 hour time frame now with all of that in mind. And this was my count. Now, I believe I shared this on YouTube yesterday. If not, I definitely shared it in the private community, and they do get a lot more detailed analysis. So definitely worth considering joining the private community, especially if you've been watching me for a while and you are aware of my accuracy. You want to get onto that accuracy before things play out. And the best way to do that is to be in our private community. However, moving on, this is the typical pattern that we trade. So the weekend trap into the 1 day move down, the W formation, we got our 3 level rises that led into the M formation. And this is where I shorted at the end of last week. And on yesterday's video, I had marked out these 2 levels, expecting 1 more to go. And as we can see, we got that 1 more here in Asia session today. Now, why Asia session makes perfect sense to me. Why? I have seen on social media a lot of people saying this was really unexpected. To me, it was not unexpected at all. What happened on Friday that caused the initial dump was Trump announced the tariffs only on Canada and Mexico. That caused the initial dump. After the stock market closed, he then announced tariffs on China. So that meant that the traditional stock market, the S&P and all that kind of stuff, they can't react to it because their market is closed. And that's why we saw the continual bleeding down in the crypto market over the weekend, because like I said to you yesterday, the only thing people can de-risk from on a weekend is crypto, because the crypto market's 24/7. So we saw that happen, but we still had Asia needing to react to the China tariffs. And that's why we saw this move down in Asia today. And what we can see here is a fairly decent bounce happening. And I would say most of my community are long on this bounce right now because of a warning that I gave to them earlier today. I'll show it to you right here. This was a 15-minute chart where price had come into the target that I mentioned on this channel. And on the lower time frame, we were creating this pattern here, which is called an H pattern. And I told them, look towards the end of Asia. So you can see here, Asia hadn't started yet. I told them look towards the end of Asia to break above this boxed area here, and then for UK to retest to show a short-term change in trend. That's where we're going to get long positions. So if we go back and have a look at the price now on lower time frames, this was the exact thing that I shared in Discord. So we have that part right there is called the H pattern. Now, H pattern doesn't lead to a reversal necessarily. It can lead to continuation, but it kind of depends where you see it and how many levels you count. So because I counted the 3 levels on the 1 hour time frame, I was looking for the H pattern to reverse the trend, at least give us a temporary move to the upside. That doesn't mean I think it's necessarily worth trading. It just means I think there's a temporary move to the upside, and it's more really for loading altcoins that you don't want, that have dropped a lot, that you just wish you weren't in anymore, then, you can use something like this to sell out at the highest price. So this was the short position that was opened on Friday that came down into our $91,200 target. And therefore we look for potential trades in the opposite direction. The H pattern has played out. Asia, as you can see right here, did make the move and extended to the upside. We often see extensions in the last 1 hour of each session. So that's where we look for our trade setups. So don't tell me as a day trader, you need to be stuck in front of the computer for 13 hours a day. We don't. We come and we look here for 1 hour and we look here for 1 hour. So 2 hours work a couple times a week and that's it. You can consider yourself a day trader. So we have the breakout now. UK has started. We want to see a trend like this start to form now, where as it comes back down, we create higher lows. That's going to give us more confidence that we're going to start to have a bit of a recovery. However, I would still be very, very careful of opening long positions for a few reasons. Like, you sort of have to be aggressive in moments like this, but also you have to understand that it's high risk to do it. So the reasons why I'm saying I would be very careful is because US still needs to react to China tariffs, because like I said, stock market was closed and US tends to make the biggest moves. So it could be now that Asia into UK is having a very short-term recovery and US brings us back down and just starts the whole 3 levels again. That's definitely possible. So we want to be looking over the UK US session open to see if the trend remains. And, if you are scalp longing or whatever you want to do in this range, just be prepared to close out any long positions if the US starts to bring the price down again. However, if US opens and we continue creating higher highs and higher lows on a smaller time frame, then you will get a pretty good risk to reward day trade out of it. The other reason I say to be cautious is because the low of the week is at 96,520. So that's the lowest point that price went last week. And this week, Asia obviously broke that to the downside, which will end up creating a new low of the week when this week finishes, providing we don't break down even further. But what that means is that this price action happening right here could just be a very short-term retracement back to retest the low of the week. And especially because that's around today's initial high of the day as well. If the price rejected anywhere in that zone, it would basically mean all we have is a break of the low of the week and a retest. And if the retest shows weakness, we would expect we're coming down even more. So it's very, very critical. If you're taking this scalp long, it's critical that we get back above the low of the week and today's initial high of the day, which is at around 96,870. So yeah, just get back above here. Otherwise, consider any long positions to be short term and just be really, really careful about that US open. And look, guys, when we have high volatility like this, I mean, it's great for day traders, but it does mean you need to be able to make trading decisions pretty fast. So if you're looking for an exchange to trade on, definitely check out Bitunix. It's the exchange that I personally trade on because it allows me to execute my trades really fast, but they also have spot trading as well as futures trading. So just depending on what you want to do, and tons of pairs. And if you use the exclusive link in the description of this video, you will get a 20% rebate on all of your trading fees for life. So that definitely saves you a ton of money over time. So be sure to check them out if you haven't checked them out already. They are a non-KYC exchange, so should be able for you to trade on them no matter where you are in the world. Now, I also want to talk about dominance because, I've been screaming some pretty big warnings about these dominances, and I think we've all probably seen this by now, but WTF to the Bitcoin dominance, because we had a pretty massive breakout yesterday as we had that big drop to the downside. And I mentioned on yesterday's video that if the dominance breaks up but the price of Bitcoin is still dropping, you're also going to bleed even more and it's going to be really, really painful. So that is unfortunately what happened. We were in this scenario here. Let me go to the daily. We were in this scenario at the time right here where it was decision time. We were hoping for this one because then our alts would be safe, but we knew there was a risk of this one, and that unfortunately is what has happened at this point in time. That just means like it's really not, in my opinion, it's not time to be buying dips on altcoins. And I know I'm going to get a ton of comments saying, oh, if you don't buy when others are fearful and whatever. The facts are the facts. We also have USDT dominance shifting. And also, like I said, when I say buying dips, I mean to be bag holding, to be buying and holding for the long term. Like trading in and out, fine. There's tons of gains to be made there. Even if you're a high time frame trader, 4-hour time frame, daily time frame, you can make money doing that. But just buying dips every time we kind of drop. I don't know, how's it been working out for you so far? It's probably been working out on some fundamentally good things, but when you're talking in general, you're talking about over 9 million altcoins. So in general, probably hasn't been working out for you so far. Now with the USDT dominance, I warned about this yesterday as well, the higher low that was being created, and unfortunately that's broken out to the upside as well. So USDT dominance breaking to the upside means that people are feeling a little bit risk off and they could be exiting the crypto market, or they're essentially just moving into stable coins because it feels too risky and they don't want the fluctuations right now. So they're just protecting their capital. That's totally fine. When we look at the total market cap, excluding the top 10, so monitoring this for your favorite shitcoins, we've had this big drop. Now this drop magically landed at the exact bottom of my area of interest. So that leads me to believe something like this may happen down here. And that's going to be worth monitoring over the next, few days, couple of weeks potentially. It will take time for this to form because it's a daily time frame. But if this area holds here at about the 7.8%, if this area holds and we start to come back and then create this higher low, that would probably also mean that Bitcoin is holding its daily support, and that might turn into an opportunity to start trading alts again. So again, I'm going to go into more detail on this in tomorrow's video and give you the strategy, but that's the start of something good, and this is not. So this was the idea I was hoping would play out bullishly, but it didn't. So this was the initial move up in the total market cap excluding Bitcoin, so every other altcoin, and we were forming a symmetrical triangle after this uptrend, which in traditional trading you would expect that would break out to the upside because that is a bullish formation. It's a bullish continuation pattern, but of course they can fail. This is why I don't personally trade typical retail patterns, because in this case you can see that it did in fact fail. And if you have a look, that wick came right back to this blue vector right here. So it's a important area, and the same thing, now that we've seen this big spike out of it, it could be the beginning of at the very least, short-term recovery. So we would want to see the same thing kind of happen here, and that would change a few of the targets if it were to happen. But I'll go through those targets and things like that on tomorrow's video. There's going to be time for all of this to happen anyway. As I mentioned, it's the daily time frame and it will take time for these things to form. But if you're wanting to get back into altcoins, these are the things that you need to be looking out for.